CommuniTraders, Okana here. I'm going to talk about a couple of trades I took this Friday, which is basically yesterday. And I'm going to talk about how I took them because I used a couple of different time frames, and I'm going to show you how I took them because we had some questions in the Skype group, and I promised to make a video about this to clear things up. I got a question about time frames. I mean, is it any difference between the 5-minute, 15-minute? And I hope this video explains these things. So, for example, the first trade on the USD JPY, also use some currency correlation. As you can see, I have two charts. I have the Euro USD on the left and the USD JPY on the right. And you can see that the USD JPY is on the 1-minute time frame. And so I was watching this, and I jumped into a trade here approximately in this area. So let me put an arrow here. So at the beginning of this candlestick, so about here somewhere, and I'm going to show you the trade first so you know that I actually took this, which was about 10-minute trade. As you can see, the entry here, right, and the expiry up here. So as you can see, entry and expiry up here, and the opening price and the market price when the trade ended and the return. So let's take a look at why I took this trade. To be honest, I didn't even draw any lines. I just saw the price moving up, and I saw the candlesticks. And if you have a lot of experience watching candlesticks, you immediately see all the details without doing anything special. But let me draw the lines and explain what I saw without thinking about it much, so you can also learn from this experience. So the first thing you see is that price was climbing down, but then there is a breakout here. Price started moving up, and then another detail you see immediately here. Now remember, this is just a 1-minute chart. So another detail is in this area. You can see the first bounce down here, and the big drop here, the drop here, and here, and here you can already see the breakout was actually here already. But why did I wait all the way until this candlestick opened here before I entered? Because as you can see, there was a resistance here I was worried about a little bit, but then when I saw the candlesticks are hanging around in this area, I waited, and I thought that if a candlestick opens up here, then I know that it's targeting this moving average, which is another detail. So I had a target here. My target was the moving average, but I also had the price action target, which is in this area. So I thought that price will most likely try to reach this area if this happens. And you can also see the higher lows. Price is creating higher lows, which is the first one was in this area, which was the right before the breakout here. So now that we start to analyze it like this, we can see that there are actually lots of details here. So we had the resistance line getting broken, we had this area getting broken, we had the higher lows, and that price already broke out of its downtrend here. So we have all these in just the 1-minute chart, and we have the target. Remember, we also had our target here, which was the EMA, and price was attempting to reach it. And so the reason I waited was because I wanted the price to open above this resistance, which it did. And you can see there is a small gap. I mean, it's very small, but if we zoom in a little bit, you can see it. You can see there's a small gap between this candle and this big candle here where it opened. and this was a good sign for me. When it opened like this, I wanted to enter before it jumped up, so I entered in this area, and this you can see that the price I got at the broker's platform was the 103, 102, which is pretty similar to my MetaTrader quote here that I have on this line. This trade closed here on this candlestick. So a short-term trade, because I was using the 1 minute chart, and you can see here already, if you look at previous history, 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 minutes seemed pretty good. Here again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So based on the 1 minute chart, I placed this trade, and based on the price action there, I also gave it the necessary time, which I thought to be the 10 minute, because the distance was also close to my target. And look what would have happened if I had given it a longer expiry. You see, eventually price came down and came back below my entry even. So that was the 1 minute chart. But also another thing, there was another reason for me taking this call option. At the same time, while USDJP was moving up, I saw a currency correlation. We call this currency correlation. So at the same time, price of the Euro USD was moving down, and this is the 15-minute time frame, but it doesn't matter. You can see that it's bearish. You can see all these tops attempting to reach up but failing, getting pushed down. So heavy resistance here in this case meant heavy support. So while Euro USD was moving down, this candlestick was bearish, moving down. I was expecting the USDJPY to do the opposite signs. You can see here that before that, when USDJPY was going down, Euro USD was going up, and now it was going down, so USDJPY was moving up. So there was this currency correlation I had in mind as well. So now that you see all these details, we had pretty much 5 confirmations, the 3 trend lines, the support resistance lines, the target, and the currency correlation. So 6 confirmations for this trade. And also, pay attention that I didn't care about the stochastic. See, it was completely overbought, yet I placed a call option, because you don't stare yourself blind at just an indicator. See how it was completely overbought. It was above 80. So some people would have probably, a lot of people probably executed put options here and lost because of just getting in because of the stochastic and not paying attention to support, resistance, and price action, and all of these things that we talked about. So the next trade that I wanted to show you also, which was based on the same asset, USDJPY, but on the 15-minute time frame this time, which is here. I don't have the chart picture because I signed out of the platform before it closed. But as you can see, it was I invested this amount, the return was this amount, so it was a winning trade. And you can see the price, the entry, and the expiry. So same asset, and the expiry was about 23 minutes. So this was also another call option. And if we go to the 15-minute time frame, I was watching the USDJPY drop, and it was in this area, in this region. So it was dropping, and I saw this area, which is pretty much, remember, I didn't even move my line. This is the same line I had from the trade I just showed you. But I wasn't actually thinking about that, because remember I told you I didn't even have a line. I just did the first trade without thinking about this, which was in this area. So now that price was coming down, I was expecting a bounce somewhere in this region. But thanks to looking at the 15-minute time frame, I also thought that, okay, look what happened before. Last time, this 15-minute time frame went all the way down here, before price opened and continued up. So watching the 15-minute time frame, this told me that maybe another 15-minute time frame could be moving down before the bulls come back in, and that price could potentially move further down. So this is the difference between how you think when you look at the different time frames. So remember, in the 1 minute, on the 1 minute chart, I chose the 10-minute expiry based on the 1 minute candles, but here I'm looking at the 15-minute time frame, and I was, based on the price action history on the 15-minute candlesticks, I realized I needed a longer expiry, so I gave it enough time for it to return back up. And I also didn't enter in this area. I entered further below, which was about here on the brokers platform. It was in this region on MetaTrader. So the 71 on brokers platform, I think it was about 75 on the MetaTrader chart. So I should have waited maybe a few more minutes for it to come down completely. I wasn't sure if it would, but that's why I give it so much time, so it would have the time to return. As you can see, this 15-minute candle, this one closed here and the other one went up. So the analyses were correct thanks to price action history, thanks to taking into consideration the time frame before taking the trade. There was about 8 minutes. Remember, my trade was executed at 1852, so there was about 8 minutes left for this hourly candle to close, right? Let's look at the hourly time frame. You can see this hourly candle was coming down, and I was expecting it to close bearish. So for this candle to have time to finish, I didn't want to choose the full hour expiry, which actually would have worked because price turned around pretty quickly. But I gave it another 15 minutes past the full hour. So 19:15 was the expiry. Obviously, I could have given it longer expiry. It would have worked. But since price was moving down, I was also worried that the downtrend would continue. As you can see, it did continue later. You can't know how much later, so it's always a risk when you trade against the main trend. It's better to take the lower highs and trade in the direction of the main trend, and today you could see that it was a big drop. So it's safer to do that. But when you enter like this, pay attention to the time frame, the previous history, and where is this candle going to close next. Don't jump in too early. Pay attention to the time frames, and you can see that once this candlestick closed, the stochastic was also oversold, but it wasn't here. That's why I wanted this candle to come down, and I had a feeling that once this 15-minute candle would close bearish, the stochastic would also become oversold. So now if we look at it on different time frames, like the 5-minute time frame, you see it was oversold on this candle, which was the entry candle, and you can see that on the 30-minute it was not oversold, but we didn't care. We had a short-term call option. I hope this cleared up the question about which time frames to look at and how the different time frames tell different stories, and you adapt your expiries thereafter. Of course, in this case, you could also see a support on the hourly time frame. You could see the moving average. This is a moving average 99, by the way. And you could see that it was a support that got broken here. So price did move up, bounce off of this moving average. So every time frame tells you a story. You should take a look at as many as possible. And when you look at different time frames, your approach is going to be different. Your expiry is going to be different. Your entry might be different as well. your trend lines or your support resistance lines, the volumes are much bigger on different time frames. You can see that you have the stronger support resistance lines, the more significant ones are easier to spot on the higher time frames because of the larger volume and the higher amount of touches that you can spot on higher time frames rather than the lower time frames. So thanks for watching. I hope you learned something. See you next time.